Hi, Warriors. How's everyone doing? Hope you got through the Fed okay. Hi, Alexander, Michael, Brand, leading you once more into the breach or over the cliff. How about that, Brand? Andrew Pert, Ingmar, Kman's here. All right, Patrick,
Good
how are
morning,
you?
Coach.
Hey, Blake, how are you?
Hi, Dale.
Hey,
Alive.
guys.
We're
Hey,
alive.
guys.
We
So,
made it.
comments on BOE right away. I guess that's a
Um,
newsworthy. Huh?
yeah, and dovish, and it doesn't close all doors, but the vote was 6-2-1, so 6 for a hold, 2 for continue to vote for a hike, and then 1 the ultra dove Dingra. That was kind of what we could expect, that she already votes for a cut. But it's a bit of an undovish meeting, saying the work isn't done, saying that the market pricing of conditions is a bit too loose compared to what their findings are. But it doesn't close any door for the future. That's where I left it. He's still babbling, but let's say it could have been a lot more dovish than that. So the sterling is behaving rather well on the back of it.
Yeah, it's still in this range, so it didn't
Very
resolve the
much,
range yet,
very
right?
much so, and that's what I was saying this morning as well on the flow show. Yeah, I mean we're moving around in ranges, but it looks like we are going to have to see
It's
real
2 months of it.
divergence. Hmm?
2 months of it already, I believe.
Yeah, we're going to have to see real divergence, whether it be in growth. It can come actually in through the labor market. Tomorrow we will see the US market, but yeah, overall, FX is if you're a good range trader, you can make money. Otherwise, it's a game of patience.
Okay, so I want to throw this out. I see Ryan's not here, so for you and Blake. All right, so we know the Fed, we know what they did, and we know what he said,
Mhm.
and even took March off the table too, right? And so Fed, the discount rate's still up there, and he made his announcement, and yields dropped. So does it really matter? Or was it the market's interpretation that because he's not easing yet, there's going to be more weakness and that's why yields dropped? Why did yields drop after we went with no easing and no easing into March and the discount rate's the same place? People keep saying it, but does it matter if the discount rate is 5 and yields drop like this?
Well, that's a good question. But I think one of the reasons, well, a few reasons yesterday were a bit of nervosity around the regional banks again, then the US
Yeah,
Treasury announcement coming out, and then Powell didn't change much to it. And actually, if you look at it, they are just steering the course, right? We're fighting back against March, but so March is now being relatively brushed off the table. Banks are starting to change their revisions, but people are still expecting slowdowns this year, I'm going to say. So it's a tough one. And if you look at the dollar isn't well. It's been uneven, because if you look at the dollar yen, one could argue differently, but the dollar is still doing pretty much okay, right? If you look at the euro is lower,
yeah,
the Aussie is lower, the
yeah. It's Aussie sharply lower. So yeah,
yeah,
you
sharply
you would
lower.
have thought with the yield drop yesterday, it would have put pressure on the dollar. Is
Yeah,
that
but
what you're saying? Yeah.
then look at the differentials. The differentials are not really moving that much,
Okay.
and it's still one big pot of nuts. I mean, it's still like that. And yes, the yeah, there's little else to say, because it's going it's going to need something here to break those ranges in FX.
But but Kman, I want to, this is something that I was discussing last night on the trade off with Chris Weston, and one of the things that's kind of stood out to me yeah, you got dollar strength. You actually even got some follow through last night, but yields are also down. You got the bond market, which is, you got the 10-year that's attempting to break out right now. And so you got this, interesting dichotomy where the bond market's rallying, but the dollar's rallying as well. So, and do you, I think what Dale's trying to say, or maybe ask, or maybe I'll ask, why are we seeing the bond market strengthen and the dollar strengthen following the Fed?
End of month yesterday. Don't
I'm
forget,
sorry?
end of month yesterday, there's been rebalancing going on from stocks into bonds.
Yeah.
And
Yeah.
and that's part of the play. I think today and tomorrow, especially tomorrow, because I think now the focus is really, 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 I mean, really, I think Powell put the focus on the jobs market as well yesterday. And tomorrow is going to be a big one, in my opinion. And then we will see what the sorry, I'm going to kill my squawk. And then we will see what the market wants to do. The stocks are rebounding a bit this morning. We will see how bonds will be doing today as well. And tomorrow, especially tomorrow. I'm already really looking forward to what's going to happen tomorrow.
Look how weak
Yeah.
Apple was. I mean, I know the other shares got hit, but Apple was selling off before that happened. I mean, when we were here, the market was S&P was several hundred points lower. Anyway,
It's make it or break it for Apple today. And I
the
agree, Dale,
earnings.
that it is actually a big wedge pattern. It was one of our setups last night on the trade-off. And yeah, we get below the 200 DMA. I think that's going to get a lot of attention. And the point was made last night by Chris Weston, and I have to agree with him. He's like, well, everybody's focused on, more of the Mag 7 and more AI, less Apple, and that's where Apple's kind of fallen short. But it doesn't change the fact that Apple is probably the number one holding. And yeah, it's the largest market cap stock, or at least that in Microsoft, but it's, one of the most widely held in everybody's portfolio. So if you actually see Apple get below the 200 DMA and it starts to break down, it will grab the attention of the entire market. Doesn't matter if the focus is not on Apple.
Microsoft, that can you spell key reversal?
Yeah. I mean, that's an ugly situation. That's an ugly ass candle.
Yeah. Anyway, so crude backed off pretty good. Maybe that, I know some guys that thought that 79 level was going to be it, and that we could be back on our way down. When we were talking about 60 here, when we were, this could have just been one more ABC, and we could be headed down on that. And nat gas, despite all the selling, is trying to come out of here. So there's a 4-hour. There aren't many husbands playing this right now because the wives won't let them. But
it's a goodbye, Dale.
You mean like goodbye to the downside?
Goodbye house, goodbye car, goodbye wife.
Yeah, that one. Yeah,
it's that kind of goodbye.
All right. Everything could be that.
Yeah, right. One of the other things you were talking about crude. I actually we had a long pattern in play. As it broke out of that triangle in WTI, around the $74 level or so. Close it out yesterday because you're right. Crude does look weak, but the flip side is it doesn't look bearish, but I struggle with crude. I mean, I'm more of a crude is eventually going to go lower type of I have that type of attitude. I know a lot of people are very bullish crude, and they think that all these headlines are going to spike up crude higher. But as we go into this deflationary, disinflation, deflation, however you want to frame it, global, environment, and people, and if we go into like a more of a recessionary type of period, there's just going to be less demand And I actually think producers are going to produce more because, you know, you're going to have the Middle East and a lot of different countries that are going to be vying for more sales, and they're going to, you know, produce more. And ultimately, despite of whatever agreements, quote unquote, that OPEC make, you know, they'll say one thing, you know, we'll cut production, and then, you know, they won't. And then I think prices will eventually come down in crude as demand wanes and you know, productivity goes
Yeah.
up. But anyway, that's just my opinion on crude.
So when I
I'm less
go ahead.
bullish than most people, I think.
Okay, yeah. Also S&Ps yesterday I asked Katie, you know, if 4,800, she showed me how she got to her 6,000, showed us how she got to 6,000 for a target. And I said, well, if 4,800 was important to you, if it closes back underneath it, would that be a bull bear line for you, like a false breakout? And she said, no, it wouldn't matter now because we had two weekly closes above it. You know, I think Katie's great, but if I was long, I wouldn't want to see it close back under 4,800.
I agree with that too, Dale. I do too. A false breakout's a false breakout.
That's boring.
Spend a week above it, I don't care. You spend 2 weeks above it, you just sucked in more longs. So, you know,
Exactly.
you break
Yeah.
back below it, and now you got 2 weeks of people that have been buying and getting long, and a failure is going to be a failure. So I agree with what you're saying here.
Okay, buddy. You have you have a view, any kind of chart that shows a pattern developing from the highs here in the
Oh,
S&Ps?
I've got a belly button. I've got opinions galore. So yeah,
All
I
right.
mean, it's
Yeah, I'd like to see what you're looking at. I saw something by Greg on LinkedIn, and I think he was talking about support coming in,
of what?
4,800 in the S&Ps, you know,
Oh yeah, I mean
around
that's
or
the
it's
previous all-time high. So
yeah,
that's going to be yeah, of course that's going to be big support and something we've been talking about a lot, and that's this big green line. Green line
okay,
is really
green line.
significant because yeah, you're above it, you're bullish.
Yeah,
You get below
yeah,
it, not so bullish, right? So
right.
you know, I have to say, I know we've been talking about it a lot, and you know, Kman's seen it, Ryan's seen it, you've seen it, Dale. There's been a lot of divergence up here, no matter
Yeah,
what market you're looking at, and now you're faced with two of the most important. Oh well, I wouldn't say most important, but two of almost the most important earnings. Three, you got Meta, you got Amazon, you got Apple, and those are all a big deal. And I think that they're going to have a very big impact. And you know, whether we hold 4,800, I think by the end of the week is going to be, you know, quite significant. So, you know, I think we have to keep our
okay.
eyes and ears on
How
open.
about this, Blake? If we get through the green line, the first one, I
Mhm.
see another green line, a little bit above 4,600. Would that be a natural target for
I
it?
think that would be a very natural target. And then once you get
Okay,
below 4,600, that's where you really
it's
start to
over.
shake the trees. But
Yeah,
you know, talking about the S&P, one of the things that we've discussed here at nauseum is the equal leg completion once we hit the 161% extension of this move. And so we hit the 161% extension. We completed an equal leg move like to the T. And so to get a reversal up here makes sense. But more importantly, it sucked in 2 weeks, Dale, 2 weeks of
yeah.
longs. You know, you know, Katie, like I said, I don't agree with her. And I think I don't think you do either. So anyway, let's talk a little bit about FX because I do
Or
want to talk a little
break
bit more. Go ahead, K-Man.
before you move,
Yep.
put a simple line from the July 2023 high over the December 2023 high. And I think you will find your first intraday or little support in the no before the July
Oh,
high
July.
high
Okay. September,
prior high
August.
and then the December high, and that's coming in around 48.40. I think that's your first little support there.
Got it. Okay. So somewhere around here.
Yep,
Yeah.
from there, and then over the December high, and you arrive at 48.40. Simple.
Yeah, yeah. Okay. All right. That makes sense. I you know, I am a little you know, as apprehensive, and I have been on this breakout. I'm like, it's a breakout, but you know, we are diverging all over the place. But let's go back to currencies really quick. Let's talk about yesterday. I'm quite bullish the dollar right now, and I went
Ditto.
home long dollars because of the Fed. I mean, Fed Chairman Powell, he pushed back. I don't care what you say. Yeah, you know, he basically said March. I mean, not at this time. We don't have, you know, it doesn't seem likely at this point. So, Kman, how did you read the Fed yesterday?
Yeah, that's what I said earlier. He covered all bases, jumped from one line to one uh, side of the line to the other. He started with a less strong press conference than what the statement was, because the statement was relatively strong. But he was less hawkish or less strong in the first part of his statement. But then he just killed it at the end with the pushing back against March, sending everybody back to March as well to start discussions around QT and the RRP. So the end of his press conference was relatively hawkish again.
Yeah, it was right at the end. What I don't know, last 15 minutes, and when he said that, when his comments came out, that was like when the S&P just, you know, took a hit and the euro made one stab lower. One thing that saved the euro though is the eurozone CPI overnight, right? It did come in a little hotter than expected, and that's correct, right? I mean, I was obviously sleeping, but that's what
Yeah,
we saw.
ticking
But
down,
that,
but slowly.
yeah, at least it's supporting the euro. But you'll notice we're in this descending channel. Yesterday we talked about if we can get back up to 109, it's a great short. I think some of us in the ForexAnalytix community, hopefully you guys did too. If you're just listening in yesterday, you know, you were managed to get short some euro ahead of the FOMC. You know, as we made our move to 108.85 or somewhere around there
Hey
yesterday.
Blake, the VIX
Yeah.
that was meaningless earlier this week, making higher lows, is threatening your upside breakout at 14 and a half.
Ooh, yeah, yeah. I mean,
And I think that intel that guy told me about, that I brought it up everywhere I've been talking early before the Fed, that the intel downgrade was the event and the fuse that lit off the year 2000 tech debacle. So it may not lead to a tech debacle, but it certainly was a great, swing trade.
yeah, yeah.
And well, you only know if it's important months from now, right?
Right.
So
In hindsight, it's always
yeah,
um the it's
but
always easy, right?
it sure
So,
led to, that was Friday. So you had early in the week to sell record highs on that
yeah.
idea. Anyway,
Yeah. No,
just
no, it's
thought,
a good one. And I think you do have to watch the VIX. You know, we start getting above the 200 DMA, and there you go. It's that's where it's interesting. And I'm gonna pull this up just because my eyes are on it squarely right now. You guys see the VIX and you see the 200 day, right?
yeah,
And you see the
yeah,
basing. I think we all see
yeah,
it, right? Basing at really key support. Uh dollar Mexican peso,
yeah,
200
same thing.
DMA,
Yeah,
basing.
they look a lot alike.
They do. They do. 100% do, Dale. And I think that you just took the words right out of my mouth. So very, very astute observation there.
Trying to
K-Man,
help our community at least not get hurt. You know what I mean, bro?
that's right. I mean, that's what it is, right? It's protect and to serve. Wait a
Yeah,
second. That's the police
serve.
officers. That's never mind.
That's what I do. Serve myself.
Uh, hey, K-Man, what, I mean, today and tomorrow, obviously some big days. You know, we have weekly
Mm.
unemployment claims today. We also have ISM. I know it's a manufacturing data, not as probably important as the U.S. Services data, which we'll get next week. But and then we have non-farm payroll. And where's Ryan, by the way? Was he on the Flow Show?
Yeah, yeah, he was on the Flow Show, and then he took off. I think he had a few meetings up in town, as they say.
Oh, that's right.
And
I
town
remember.
is
That's
about 3 hours from where we live. So,
yeah. Okay. Yeah, I forgot. He was off into the city today. Duh. I knew
and
that.
for a
I
bit
knew
of
that, but I forgot.
soccer.
All right. So let me ask you this. Non-farm payroll. How
Yeah,
important is it to you? Because it seems like inflation's a big deal. Again, everybody's got it. We talked a lot about inflation, that last mile of the marathon being the hardest of the marathon run. We're there. We're in that last mile. Obviously, the Fed, wants confirmation they're going to make it across the line. But how important is the jobs data tomorrow for you?
very. To
Very.
me,
Okay.
it's extremely important. Important. I've been hammering on about it. This is going to be because it's still one of those really big dominoes that is standing. We have seen a lot of job cuts announced by different companies. As a matter of fact, the Challenger job cuts today were quite a bit higher than last month. So those job cuts are starting to show up in the numbers. Is going to be very important. And if then you take into account, even if it's only the manufacturing sector today, I would look at the well, prices for one, yes, but I would look at the employment index. This is going to me being one of those that is going to drive a lot,
Wages,
a lot.
wages, buddy. ECI, the Employment Cost Index.
Yeah, yesterday the employment cost index, and that's the one because the Fed is watching. That's another one because why yields were on the defensive as well because Powell has been saying himself that he's watching that. So yeah, that as well. Yeah, the cost index. But I really think if the job market turns around, then we are going to see a real move in bonds and.
I mean, do you think Paul is bipolar? He was like Santa Claus a little over a month ago, right? I
Mm.
mean, almost a victory lap. And yesterday he was a little bit more like Grinch.
Well,
Um,
I,
yeah,
I
it's
don't
it.
know. Yesterday he covered all bases, As I said, the first biggest and actually, okay, he killed it at the end, at the very end.
Yeah.
First part of his press conference was actually relatively dovish compared to the statement, and he
Well,
said that
that
they
it
were
took
on
the
the
whole
path.
press conference for him to, evolve into Mr. Hyde.
No, I think he's running an algo. He first lets the market go one way, and then he goes like, "Hang on a minute, let me
Yeah,
let me take you back to where I want you to be." And
that would not
that's the thing.
surprise me. Okay. Anyway,
Hey, that was true. He is kind of
isn't he
Doctor.
sketchy up
Yeah, he
late?
is. Yeah, he is.
Uh,
We're seeing some yen strength,
yeah.
Kman, and we're starting to see it show up. And you can see like the Aussie yen's breaking down, Kiwi yen's breaking down, Canadian yen off of key resistance. Sterling yen, is coming down towards the 50 DMA despite the Bank of England today. Euro yen, we're kind of grinding lower highs. Are you reading a little bit into this yen strength? Like we need to start paying a little bit closer attention because it
Yeah.
it you know higher for longer seems to be the mantra of
Mm.
central banks. As we were talking about in the ForexAnalytix chat room this morning with in the Bank of England too. So you got the Fed, the Bank of England. You're going to have all these central banks that are like, hey, wait a second, we can't start cutting rates, and then that would obviously lead me to believe that the Bank of Japan has to start normalizing and maybe the yen starts catching a bid here. What are
That's
your
what.
thoughts about the yen?
Yeah, that's what the market is actually trading right now, right? We that's what I said. We've come over those off of those tops. You would have walked in this morning. You would have said like, "Whoa, all those yen crosses are looking extremely sick." And then you look at them a few hours later, like sterling yen, euro yen. Euro yen was diving into the daily cloud this morning, but we are 80 points also of the highs. So I of the low, sorry. So I'm still I'm really
Perplexed.
open-minded. I may have missed that move back to 162 in euro yen. Because I think there may be that's one of the crosses that I think there may be something to do if we see a bit of a revival. But on the others, dollar yen was trading much closer to 146 at one stage, and we are trading at 147 again. So,
What are the expectations for
Oh, go ahead.
tomorrow's NFP, guys?
uh,
What are expectations?
Yes, yes.
175,
85,
187. I just looked, but I think it
187,
was revised a little bit. 185.
187.
Yeah. And then
I'm looking.
unemployment rate to be at 3.8%, still below that 4% mark. So,
Okay, thank you.
and obviously, as Kman pointed out, with inflation being so important, average hourly earnings is supposed to tick down. So if it doesn't, that's another feather in Powell's cap for being a little bit more hawkish yesterday. So all that's going to matter. I mean, if you're just looking at the headline number, which we won't be. Remember, we're going to be covering this live here on the show. We're going to be
Metals
looking at
taking it on
headline
the,
number. Yeah, everything. I mean, everything's
yeah.
going to, all that data is going to be super important. Dollar index still looks very constructive too. I mean, if you're a dollar bear right now, it's a tough game because it's just not getting sold. Every sell off is being met with buying. So
And you were bearish before the Bullish the Dollar, bearish euro before the events yesterday, Blake. Wanted to sell euro at 109. It fell about what, 18 pips short of that. That was a great call. Did you go for it?
yeah, I was short euro ahead of the ECB or the FOMC yesterday. I think my average was
Yeah,
at 108.60. Somebody
nice.
in the room would
Yeah,
say 65 maybe.
couldn't even get to 109.
No, I was hoping it would, but
Yeah,
I figured we would get
close
some
enough
sort
for
of
government work.
yeah, not quite close enough. I was hoping for a little bit more, but that was all right. I mean, I still maintaining a euro short. I think the euro still looks constructive to the downside.
Yeah.
Despite the better CPI, I still think it looks like it wants to push lower. And and that's the thing. All we need right now is I think we need a little bit of stock market correction towards 4,800, and the dollar is going to come out of its shoes a little bit. So you're starting to see the dollar really perk up. I want to talk a little bit about the Aussie here because this is something that the ForexAnalytix community was very well aware, because a lot of people don't look far enough left, right? When you're looking at charts, a lot of people go, "Oh, look, we're breaking down." In the Aussie. The Aussie was a natural short, right?
Yeah.
After yesterday. So, everybody goes, "Oh, it's breaking down. It finally broke 65 and a quarter." But if you look left, that's actually 65 cents is the long-term 618. This is really more critical support for the Aussie than anything. So, if you're short, you have to be careful with adding, because this could set up for a false breakdown if you get a reversal. I don't think that's going to be the case. I think China's an absolute crap show, and I think the Aussies acting like crap. And I have told everybody explicitly, if stocks do roll over, the Aussie is going to be the first place that you want to be short. And I've tweeted about it. I've been very vocal about it, and I believe that is the place, whether it's the Aussie or the Kiwi, dealer's choice, whatever it is. We roll over in equities. Aussie has been unresponsive. If anybody's long Aussie dollars into all-time highs in the stock market, they are not getting paid. They're getting their ass handed to them. So it's going to get a little worse before it gets better. I know a lot of people are looking for long time or longer term lows in the Aussie, but I don't see it as of yet, and it looks heavy. So we got just about a minute before unemployment claims come out. Hey man, what's hot on your radar today, and how are you gonna want to trade this, or what are you looking at
No,
here?
no, absolutely no interest in trading the claims. Um, no, the other ones coming out later. Yeah, we have the ISM manufacturing. Um, those employment indicator, the price indicator, and that's really what I'm looking at today. I thought sterling would pick up a little bit more on the dovish Bank of England, but it's coming back down. Not coming back down. It's like stalling somewhere in the middle of nowhere.
Yeah.
I think there's Yeah, we really need to, in cable, we really need to break that 125.90, 126.10 to get going. But I'm not that bearish, cable. I think if there's breaks down and breaks up in the dollar, it's much rather going to come via Aussie, Euro, and perhaps dollar China breaking back above 720, 122. And if that goes, then you're going to see the Aussie suffer even more, right?
Jobless claims are
A
creeping
bit
up, guys.
higher.
Yeah, look at jobless claims creeping up. That's scary, especially that we dipped below 200,000 2 weeks ago and we popped right back up again. So be careful with that. The market may cheer that initially, but that's not good for the economy. Dollar yen's coming under a little bit of pressure. And hey, Kman, I'm going to tell you this, and Dale, I'll tell you this as well. Obviously, because you guys are both here. If the dollar yen makes it above highs, like if we get a decent jobs number tomorrow, I'm a seller of the dollar yen on a move towards 150. If we get a move towards this is a 78% retracement up here, around 149 and change. We get a move up there. I think I'm going to be a seller of the dollar yen. I don't know how you guys want to play it, but I want to play it up there on the short side. But that's just kind of that. Well, Dale, you have an interview right now, right?
Yes.
Okay. All right. I want to say thanks,
Have a good
Kman,
day, guys.
for being here, and thanks for the coverage with the Bank of England. Dale, thanks for guiding us as always, and just really taking care of the community here. I'm gonna pass it over to you, so you have a great interview.
All right. Thank you, Kman. Thank you, Blake.
Thanks, Coach.
Thanks, Dale.
Dream team. Andrew O'Connell, Happy New Year. I know it's February now, but I'm still going to say Happy New Year if I haven't talked to you since last year. And welcome back to F.A.C.E. What's on the agenda? How are you, Andrew?
Dale, my trading warrior brother. How's it going, man? Happy New Year.
Thank you, buddy. So I believe if my old brain is accurate, you were pretty constructive the market the last time we were on. And if you were constructive 3 months ago, it was a great call. Am I accurate? Is my memory S&Ps? I believe we talked about them, and you were saying higher.
That is accurate. Yeah, so
Okay.
the last quarter of the year, it was pretty fantastic. One thing that I've realized just from studying the market for so long, typically I perform very poorly in the final quarter of the year when we're in a really strong tape because I'll start fighting the trend. But what I realized over time after studying is that, hey, if the first 3 quarters of the year are very good and there's some really strong groups in the market that have nice momentum, pretty much it just becomes an end of year performance chase. And
Yeah.
despite what's happening in the macro backdrop, the market just tends to levitate higher if it's got that really good year to date momentum. So, yeah, we were able to ride some of that momentum last year and into this new year as well.
Okay. So you want to share your screen
Yeah, let's go
and
ahead and
show us
share.
what you want to address today? Did the Fed surprise you yesterday, and was the market reaction a surprise, or just this pullback in the S&Ps? Just we were overdue.
Yeah, I
Okay.
don't.
Can you want to talk cannabis? Okay.
Yeah, so we
Wherever you
can.
want to go.
Yeah, well, let's start off on the indices, and then yeah, I'd love to talk about the cannabis stocks as well. But yeah, to your point about the Fed meeting, yeah, I don't think anything was a surprise. Like I kept looking at the Fed fund futures, and I kept seeing that hey, there's like earlier in the year a 60% chance of a rate cut for March. Then that probability went down to 50, and in my eyes, I don't really think there's any chance of a March cut. So the fact that Powell kind of came out and said, hey, we're not really looking for March, that's not our base case. But hey,
Right.
we do plan on cutting rates later in the year. That was kind of par for the course for me. And I think the market was just so overheated coming into that event. A lot of these AI stocks had run so much. And yeah, it was kind of par for the course, to be honest. I don't think we really learned a whole lot of new information yesterday.
Okay. I have a question as far as the market reaction. Yields dropped, which normally would have been bearish the dollar.
Yeah.
Uh, you know, he stayed firm. Discount rate didn't move, but yields dropped. It's almost like it didn't matter that he said they're not going to do anything in March. The market had a mind of its own and pushed the 10-year sharply lower. So what do you make out of that action?
Yeah,
Does it matter what the Fed does anymore?
yeah, that's a great question. And this chart of the ZN contract, if you're
Yeah,
just looking at the technicals, this thing right here
bullish.
on, yeah, on my charts, I have these things over here. It's the monthly value area. And
Yeah,
I tend to trade this way where it's like, hey, if it's above the monthly value area, that's bullish. Inside, pretty neutral, and then below is bearish. So yeah,
yeah,
from pure technical, this looks fantastic. But based on that meeting, it's kind of like, why the heck are bond yields moving lower based
right.
on what Powell said? So I did some research and I'm pumped to share it with you because I was in the same boat as many where I'm like, what the heck's going on? Why
I
does the
was
bond market
thinking the
not
market
care?
thinks he's wrong. He should have been cutting because they're worried about economic weakness. So they're leading the Fed.
Exactly. I think that's it. So we've got this story over here, this bank that essentially blew
Oh,
up
okay. Yeah.
yesterday.
Yeah. 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 Okay.
Yeah, ticker NYCB. So we're seeing continued evidence that, hey, some of these banks, especially the ones, with the real estate exposure, they're
Yeah.
struggling due to these high interest rates, and there's still
Yeah.
some cracks under the surface. So I think that's just one point of the argument. But this, I think, is much more important. Look at this that I have here on this spreadsheet. So there's a lot of numbers on here, but really the key is every single month, I track the month over month CPI number. I put it in a
Yeah.
table right here, and I track the 3 month annualized CPI as well as the 6 month annualized CPI. Right now, that 3 month average annualized, it's 1.79%, which is below the Fed's target.
Yeah.
So the inflation numbers, they're trending in the right way. If we look at the 6 month average annualized CPI,
They're flattened out.
it's a little bit higher, right? It's still at 3.33%. That's above the Fed's target.
Yeah.
So, yeah, it's not like, hey, we have a green light to start cutting rates right now. But what I'm looking at, man, is so for this 6 month number included in here in August, we got a whopping plus 0.63% month over month CPI number. And then you can see in September, we also had another really big one, plus
Yeah.
0.4%. My view is that in the next couple months, let's say we get like a plus 0.1% month over month number, or it's like plus 0.2. In the next few months, we're going to see the year over year CPI drop significantly just because some of these big month over month numbers are
Comps.
going to fall out. Yep.
Yeah. Okay.
So
The
I
comps.
so I think the market actually has this right where we're going to look back in a couple months and we're going to be like, dang, the CPI is really close to 2 now. And, given what's happening with these banks, given the level of real rates, it's going to make sense for the Fed to start looking at those cuts. But I think the thing the market got a little bit wrong was it's just not going to happen in March. It might start happening in May. It might be June. But overall, I think the market has sniffed out the plot here.
All right. You know what, Andrew? What you're doing, not necessarily what you're saying, is a very teachable moment for viewers that are watching this interview. You see all the hard work that Andrew puts in to try and get an edge in the market. If you think it's easy and you could just open up your platform and trade, you're you're selling yourself short. It's a lot of hard work to come up with conclusions. So it shows, Andrew, with all the work that you do, spreadsheets that you keep, and all of that. And the best traders are the hardest working people. Is what I've noticed. They really live, breathe it, and put intense hours into doing this. So you're a great example for people trying to become a trader.
Yeah, thank you so much. Yeah, the data science stuff, I really love it. because there's so many things we learn as traders where it's like, oh, this is just common knowledge or common wisdom. Someone said it to me, so I believe it. But what I try to do is like, how do I get to the truth? And the price action is always the truth. But to be honest, like just with my personality, I'm not the best if I'm just trading off the chart. Like I am trading off the chart, but I like to have some sort of context or some bearing for what's going on.
A
So yeah,
narrative.
exactly. Yeah, not even a narrative, but just some data that will guide
Okay.
me. So like this Trueflation dashboard. So it's like, okay, I did that analysis. There's some big month over month numbers that are going to fall out of the CPI calculation. But what are those upcoming numbers going to look like? Are the big numbers going to get replaced by more big numbers or get replaced by small numbers? This Trueflation dashboard does a really good job at showing you in real time what the inflation outlook is. And you can see this thing is kind of falling off a cliff. Now it's at 1.44%.
So we end up being worried about deflation because we're underneath the Fed target in the next several months.
That could be, to be honest, I think the market's going to run with it and just be like, look at this, it's a Goldilocks outcome. And I
Okay.
think given the fact that we're in a presidential election year, I think there's going to be some tailwinds from there as well, where they want to keep this party going. And yeah, I think, we go back to the chart, given all those narratives and data we just chatted about, and the chart is kind of in line with this. So I'm actually pretty bullish on bonds. And I think the big mistake people can make is like, are they going to start in March or are they going to start in May? Like, I think that's just kind of like in the grand scheme, it doesn't really matter a whole lot for something like a 10-year treasury or a 30-year treasury. The timing of which month is not going to matter as much. So yeah, I'm pretty constructive on bonds here.
Okay. So that bank that failed, we had a guest on Monday that showed the facility that the Fed put in last spring for Silicon Valley Bank and all the other banks that were, you know, depositors were fleeing for higher rates, started increasing demand for that. And that's before this story broke. So is it also possible that we still have some systemic risk in our banking system that that yields might be seeing?
I think that's definitely possible. Yeah, I mean, it just shows like these banks, especially the ones with the commercial real estate exposure, they're
Yeah,
basically like pinned. It's like when you're in a bad trade as a trader and you just get
yeah,
pinned and you're stuck. And it's like, dang, the only way I'm going to get out of this is if I take a loss. And I think unfortunately that's the situation a lot of these small regional banks are in, where
yeah,
it's like they need life support. So yeah, the KRE you can see had like a really ugly day yesterday and is
yeah,
trading towards the low end of this range. So yeah, I think from the KRE perspective, we basically need inflation to fall precipitously. We need those rate cuts to start coming in the
yeah.
maybe the middle
That
of the
is
year or
ugly.
second half.
Do you have a
Yeah,
weekly so that our viewers could look left?
yeah, let's take a look at this.
All right. See where it failed from?
Ah,
A few weeks ago, it didn't quite get back to the breakdown. So while the S&Ps were, and Nasdaq and AI, the new .com, were going parabolic, all we could muster since last spring was maybe a 50% retracement that looks like a pretty ugly weekly candle here. Why can't we have a problem here? And that certainly will make the Fed move if KRE starts to melt down to new lows again. So I think it's all about the banks, not as much about economic numbers, but um, if we have a recession, I think it's going to be kicked off by some kind of financial problem, not
I
and then the employment situation also deteriorates.
yeah, I could not agree with you more, Dale, because yeah, this is really what
Isn't that
matters. Like,
ugly?
yeah,
Yeah,
it doesn't look good. And I think for the Fed, it's like is the Fed just going to start cutting rates when like stocks are at all-time highs and like
Yeah,
everything just looks perfect? We
right.
probably need something bad to happen, and we're starting to see the cracks in KRE. And then what's
Yeah,
going on in
yeah,
China as well? They had that big property developer
yeah.
that's now going to be
Evergrande.
liquidated. Yeah.
Yeah, yeah. So, we're just starting 2024. You have any themes or statistics that lead you to how you're going to position yourself this year, or at least in the first quarter? You're
Yeah,
going to buy
so
this break in S&Ps and Nasdaq, or what?
now I think we're in a kind of tougher spot. I think February is going to be a really difficult trading month, and I think March could be as well. I think sort of like we had a little like easy money window in January, and I think
Yeah,
the next 2 months will be more challenging. But the theme that I'm following very closely, so I'm doing the US Investing Championship again for 2024, and I've turned more into like a swing and position trader over time. So the theme that I'm very in tune with, this is actually my biggest position. I put it on right in the beginning of the year. It is oddly enough these these cannabis stocks. So check this out.
yeah,
Let's see what we got going on over here. Let's pull up the chart. Basically, the theme that I'm tapping into is, hey, these cannabis stocks, they had a great rally heading into the last presidential election. And really the narrative was, hey, we're going to legalize cannabis. It's going to be awesome. And there was a huge run. But then it turned into a big sell the news event. Once the election happened, Biden won.
well,
We
it never happened. I mean, they never got that law passed so that um, they could have bank accounts and write off expenses. I forgot what the act was called. So recently, what they did by just lowering the schedule is kind of a compromise. It's not the whole package, but it helped, right?
exactly, yeah, that Safe Banking Act never went through.
That's it. Yeah,
Yeah, so there were some promises or some like, yeah, it basically just turned into a buy the rumor, sell the, news not happening. But then if you look over here on the chart, this thing just got absolutely obliterated for 3 years straight. And you
yeah,
can see like this was just an absolute washout down here.
yeah,
Then we got this headline that crossed the wires.
yeah,
HHS recommends reclassifying cannabis from Schedule 1 to Schedule 3. And you can see a bit of a change of character here where we had a nice pop. One thing
yeah,
that I track on my volume here, this HVE, this means that it was the highest volume ever. So we got that headline, and suddenly this thing looks a little bit different, right? But there's
yeah,
so many bag holders in this ETF that you can see we had a full retracement of that move.
yeah,
Then we rallied back, and you can see we have another retracement here, but not as deep.
yeah.
And now the MSOS is
Challenging those
climbing.
highs. Yeah,
Yep. So these highs right over here, we're challenging those highs. So what I would love to see, I put the MSOS on right at the beginning of the year. And my goal for this trade is let's see if I can hold it for the entire year. So I would love to see this thing even
pull
pull
back
back here.
and add
Mm-hmm.
on.
Yes, pull back. Maybe this thing consolidates, tightens up a little bit,
Yeah.
potentially add to the position. And then if we get some good news here, and it's going to depend on if we actually get some good news, then perhaps this thing has a
Well,
breakout.
can we really expect anything like a safe banking act to come through this Congress until next year with the election? I mean, they can't even get a, a bill passed about the border and aid to Ukraine. So, I mean, this isn't high on, Maslow's needs. I believe it was Maslow's hierarchy of needs for the Congress.
Yeah, so I don't think we're going to get like a comprehensive like safe banking act. But
Yeah.
really what we're playing for this year is just that rescheduling of cannabis from a Schedule 1 drug, which is like, the most dangerous drugs out there, to Schedule 3, which is it's like more minor drugs. So that I do believe it's achievable. And I
Okay.
think this Biden administration they want to show, hey, it wasn't an empty promise. We made that promise and hey, we made a little bit of progress. So I think to try to win voters, there will be that push. But to your point, yeah, getting something actually through, that's a whole nother story. So that's part of the risk of the trade where if nothing happens or if that all blows up, I could see this thing retracing all of these gains since this rumor started. So that's really
Yeah.
like the risk.
Okay. All right. Well, very unloved sector. A lot of people got rich initially and went to the poorhouse for years on this
Hmm.
trade. Show a monthly of this.
Yeah,
So
check this
people
out.
have perspective that even though it looks like we had a big rally here, and it was a nice rally in comparison to where it was, I mean, it's just a correction. So we can't see how high it was. Maybe try the weekly.
Yeah, let's go back here.
Look at that.
Yeah,
So
let's
it's
go.
really just coming off what, a 2-year base.
Yeah, check this out. So from the weekly perspective,
Yeah.
yeah, this thing
50, 50,
all the way up
60.
there.
Yeah.
Huge slide. And now you can see, so we had a massive downtrend.
Yeah.
Now this thing is starting to, it just looks like it's kind of
Base.
basing sideways now.
Yeah.
So now here it's like, I have people that I know that they're like, should I sell my position now? And because it's up like 30% year to date or something like that. And for
Yeah.
me, I'm trying to take this as more of like a position trade where
You
like,
know
hey,
what
it's not.
Andrew, I just had a flash.
Mhm.
Let's do what those guys did in the movie Dumb Money with GameStop and just start a whole, trend about cannabis stocks and go into all the chat rooms and change people's lives and have it go up 30 times. And anyway, did you see that movie Dumb Money?
Yeah, that was great.
Yeah, anyway, so let's be dumb money and get rich. And instead of being smart money and grinding it out. Anyway, um, yeah, some interesting looks here in the cannabis, and I wish you a lot of luck in that championship you're going out for.
Thank you so
So,
much.
um, anything else you wanted to wrap with?
Yeah, so I think that's about it. Yeah, cannabis is a big theme for me. I'm
Okay,
also really constructive on bonds for the reasons that we shared earlier.
okay,
So yeah, I guess my closing thoughts is I think in 2024, given that it's an election year and given that inflation is undoubtedly moving lower and the Fed policy is getting a bit easier, I do believe that the market's going to levitate higher throughout the year, but I think there's going to be some bumps and bruises along the way. So I'm bracing myself for a much tougher February environment and a much tougher March. But yeah, I'm pretty optimistic overall. But yeah, thanks so much for having me on today.
Andrew, just something that uh, kind of looks similar, despite the fact that physical gold has been holding up and silver doing okay. If you look at the miners, they look a little bit like the cannabis.
Yeah, gold looks so good. Yeah, the miners, yeah, they're doing their thing. They're kind of chopping sideways as well. I think for me,
For a
like,
long time. I mean, they're within eye shot of, well, that's a metal, but pull up a miner like Newmont or any of them individually.
yeah, let's take
Newmont
a
had
look.
some mining issues, but look at that.
Yeah, this
We're
one,
almost back to the COVID low.
yeah, that's kind of interesting because gold is looking so good. So I'm
Yeah,
wondering why these miners are not following.
well, good. I planted the seed. Let me know after you do about 10 hours
Yeah, this
of
is
research.
interesting.
All right. Huh?
Yeah,
Yeah,
this is interesting.
I thought this was kind of like your style. You could put up GDX as a little better chart, but there are a lot of golds that are pressing new lows with gold, trading where it's at above
That is
2000.
that is nuts. So yeah, if gold does something and just like it's so close to breaking out, if it gets that breakout, then yeah, these gold miners have basically a catch-up trade in them, it looks like.
Yeah, they've been lagging big time. Or the silver's been even worse. SILJ is the junior miners.
Yeah, let me see this. ILJ. Over here, this amplify. Yeah, very similar. Let me see the daily. Yeah, so if we
I
look
mean,
at
right now it looks negative to me, but I'm getting ready to try a buy. I'm looking for one more break in the metals as the dollar goes to 105 or so.
yeah, I'll be watching these, especially like, we saw some weakness the past couple days, but we
Yeah,
have this low from November.
yeah,
So it's like, hey, if this thing, we have this low from January 19th. If
yeah.
this thing can't make lower lows and just turns here, trading against this pivot right here, like this 929 level, I'm pretty interested in that. I'm gonna set an alert here.
Okay. Anyway, give and take. That's what we do here in interviews. It was great batting the ball around with you, Andrew. How do people follow your work and stay in touch with you? On X, I know it's Real Pristine Cap. Any other way if people want to reach out to you?
Yeah, so check me out on X, Real Pristine Cap. I also write a Substack as well. And basically, what I do is I just take all of my nightly research that I use to prepare for the trading session and I put it all in my Substack. So definitely feel free to check that out. There's a free version and a premium version. And yeah, I'd love to see people over there.
Okay, Michael Weissman's a man after my own heart. See what he wrote
Oh, yeah, let's see.
in the chat?
I'll, I'll do my best for the consumption side. Let's go. Appreciate
I'm
you,
going to try and
Michael.
help you too, buddy. So good luck on that trade. Medical. Anyway, thanks, Andrew. Great getting together with you, and let's get in touch, and we'll be talking in the spring again.
Thanks so much, Dale. I appreciate it. Thanks so much for everyone for tuning in. Talk soon.
Yeah, Andrew O'Connell at Pristine Cap. Follow him. And you can join the team in about 17 minutes on the Morning Edge. And we'll be back here on F.A.C.E Live to cover the NFP Live. Trade it with us. You're welcome. You're welcome, Laura. See you guys. Don't just count your pips, count your blessings. Adios. Thanks, Ingmar.